is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hi, everyone, and welcome back to another episode of DeFi Decoded. Alex Tapscott here with my co-host, Andrew Young, and we're very delighted to have Lex Sokolin, the global fintech co-head and chief economist for Consensys Systems, or Consensys. Consensys, if you don't know, is a blockchain technology company building the infrastructure, applications, and the best practices that enable a decentralized world. Lex specifically focuses on emerging digital assets, public and private enterprise blockchain solutions, DeFi, and autonomous organizations. Previously, Lex was the global director of fintech strategy at Autonomous Research, which was acquired by AllianceBernstein, a large traditional financial company, an equity research firm serving institutional investors, where he covered artificial intelligence, blockchain, neobanks, digital lenders, robo-advisors, payments, insurtech, and mixed reality. Lex is a frequent contributor as well of thought leadership to the Wall Street Journal, The Economist, Bloomberg, FT, and others, and a regular speaker at industry conferences like Money 2020. He's also a graduate of Amherst College, just like me, but 2 years earlier. So Lex, welcome very much. Welcome and thank you very much for coming on the show.
Absolutely. My pleasure. Happy to be here. And I will take a note to cut down that bio because I feel like it's venture capital bingo in my last 5 years, neobanks, crypto, blockchain. So I apologize.
Yeah, those are all important topics, even if it does read like a fintech laundry list. So let's start basically first with your role at Consensys, and maybe you can also tell us a little bit about your history while you're at it. So I mentioned briefly Consensys at the top of the call, probably an organization, a company that has done more, I think, than any other to really kickstart blockchain 2.0. They were big backers of Ethereum and helped to incubate, promote, develop a lot of nascent business models that eventually became some of the big DeFi projects in the world. And one project in particular, MetaMask, obviously is sort of the main gateway still for people to access DeFi on Ethereum. But it's also a company that's received investment from JP Morgan, and I know has done a lot of work with enterprises and traditional banks. So why don't you tell us about, well, first of all, how you, with the background that includes a lot of traditional financial experience, found your way into the world of crypto, and what an average day looks like for you at such a varied and diverse organization.
Sure. It's a multi-pronged question. I'll do my best to stay organized. So the first, to frame Consensys a little bit, right? I think Consensys has been through 3 phases of the company, and it's a foundational company in the crypto space, and in particular in the public blockchain space, but also in all sorts of adjacent ways. And the first phase was to populate Ethereum with things that work, with developer tooling, with projects, with venture funding. And so this was sort of the early days of investing in 100 different startups that were trying all sorts of things and trying to get a garden that blooms into a portfolio. And the second phase, which coincided in large part with the slowing down of the market, was to say, okay, there's all this cool stuff. How do you commercialize it? And so we built out a big services organization. We started creating inroads into governments and banks, and really kind of dragging the market globally to thinking about blockchain applications when they, mostly just didn't want to. Maybe they had some POC budget, but that's about it. And so getting that stuff off the shelf into the distribution channels of institutions was kind of phase 2. And phase 3, which is right around when I joined and have been part of that transformation, has been to say, okay, well, there's this big portfolio of stuff. And then there are these relationships that are really important. What is the core of the company really? And we've landed on an answer that says, number one, we help people use Web3. And so that's MetaMask. largely, but in many other ways, we're trying to get users into Web3. And then number two is we help developers build more stuff in Web3. And there's different types of developers. There are individuals who are writing code and launching their own DeFi project or NFT project. And then there are institutions and enterprises that do that. And so it's users and it's developers, right? So it's the same flywheel you expect to see in an app store or an operating system or and financial. And so that company spun out of the portfolio about a year and a half ago, raised money, and is sort of in the news now as the operating entity. And that's where I sit. So that's one part of the story. The other part of the story is just my journey. And, the short of it is I combine like a passion and a geekiness for finance and fintech with an interest in novelty, visual arts, coding front ends and UIs and design. And so that's a very strange personality to have in one person, very incompatible with an investment bank, despite me having worked there. And so my journey is kind of like a person who's watching YouTube and continues to click more radical videos until they're insane, and that's kind of where I'm at now. I'm fully radicalized. So I started my career at Lehman in the investment management business, spent about 2 or 3 years between Lehman, Barclays, Deutsche Bank. And that gave me early permission to, the 2008 crisis and kind of bankruptcy gave me early permission to do entrepreneurship in the sense that nobody else really knows better either if they can't get the basics right. And so I got my start in digital wealth and robo-advice, founded a company that, long story short, put investment into a website. And now we have lots of things that put investments into the phone and distribute traditional financial products. And I kind of looked at fintech overall and said, all this stuff, all this digital everything, digital banks, digital investing, digital payments, all of this stuff is really Scotch tape and not the real thing. It is the Spotify of CD-ROMs. It is a digital distribution of things that are just not designed for that footprint. And I've been aware of Bitcoin as a fintech entrepreneur, but it was when the Ethereum ICO launched and the idea of these computational chains came out that really it all clicked. It started to click together that maybe you can manufacture financial products on chain. And maybe if you do that, that's actually the transformation that finance has been missing. And so I was very enamored with the idea of DeFi. And when Economist sold in 2019, I joined Consensys. And I joined Consensys to co-lead a group that was focused on fintech and DeFi and digital assets. We're still in crypto winter, so it was more institutional than not. But really got kind of hooked, and we started building out all of these services around focusing on DeFi and things adjacent to them. And over time, I've gone through a couple of roles at the firm, briefly running the marketing team, and now I've shifted towards this crypto economics role where I work on. I take seriously the idea that tokens matter and that tokenomic systems matter and that DAOs, are a next generation organizational construct. And so, I spend most of my time looking at on-chain token stuff these days, but have lots and lots of connectivity to the other bits and pieces.
Fascinating. I love the concept of manufacturing financial products on-chain. It's a very it synthesizes traditional finance kind of approach with a crypto approach. Your bio says that you're the head of fintech and also the chief economist. So can you tell us a little bit about that dichotomy? I mean, I guess they're related, but which hat are you wearing more often?
Yeah, so these days, definitely the crypto economics. And Consensys is an interesting place in that you can, there's just a lot of surface area to build. We're doing CBDCs, and then we're also doing MetaMask swaps, and then we're also doing MetaMask institutional for hedge funds, and then we're also launching NFT platforms. And working with something like 10 different 10 different governments or banks around digital money, so you can go in lots of different directions. I started focusing on kind of bridging together the various fintech type products that Consensys had in the early days, and they were under different brands. They had different logic. Often they didn't know what it was that they were doing. So like there wasn't a lot of finance in them. It was like this cool stuff you can do on blockchain. And so me and a co-lead organized about 6 or 7 of these together into an 80-person team and created like an architecture called Codify, which is codify.consensys.net, this modular architecture for how assets and payments and investments would and should come together in a embedded finance type approach to crypto. And once I've set that up and I did a lot of the packaging for that and go to market, I ended up being given the opportunity to be the CMO of the company and kind of repackage and reorganize some of the marketing functions between institutions and developers and consumers and kind of make sense of what the positioning was. And I did that for a year while being connected to the fintech stuff. And one of the core things that came out of wearing a marketing hat and like trying to understand developers and understand a footprint that is, so today Infura, which is a Consensys project, has, I think, something like 400,000 developers that are using it, 400,000 users. MetaMask has something like 30 million users, right? These are big footprints. And so if you combine that with the finance stuff, what starts to become clear is the shift to Web3 is a shift to the tokenization of everything, which, in old finance terms just means that the securitization of everything. Mm-hmm. So every 14-year-old on TikTok is now a derivatives CDO financial engineer. And if you don't like that, it's too bad because it's too late. Like it's literally too late to put that back into the Pandora's box. And so you've got millions of amateur financial engineers that are in this extremely complex but unbelievably compelling dopamine world who are sticking together into tribes organized through, like trolling, memes, cartoon characters, and like populist anarcho-capitalism, and it's just wildness, right? And the way that this is glued together is through token rewards and applied macroeconomics, and macro and microeconomics. So you're applying, you're designing economies and you're designing relationships at scale, but with people, which is something economists have never been able to do before. And so I've leaned into that because I think the product is one tool, and product is important. And that's, we all use software, but it's a tool. And then marketing and growth and expansion is a tool. But I think the edge really comes in like decentralized community and like taking a rigorous and serious view towards tokenomics, trying to make it persist through a particular market cycle. And, like, I think it is so difficult and we're so early that it's almost impossible to tell if some project is doing really well because they did something right, or some project is doing really well because everyone's wrong and like the market is forgiving, and so I find that to be just a fascinating intellectual challenge, as well as, a really big lever. So like around a MetaMask token, around a Consensys token, and so token engineering and DAO construction are things that I'm focused on, I'd say, most of my time.
Well, I know Andrew's got a couple questions that he's dying to ask, but to me, it sounds like you're touching on a couple things. So one is, there are technology tools, Web2 technology tools have created ways for communities to organize around, themes or causes or ideologies. And now they're applying that to markets with sort of surprising effect. Like if you look at like the meme stock trend or the meme coin trend or any of these kinds of things. But at the same time, you're also talking about new models for providing financial services, organizing capability, and so forth. And like the question to me is, how do you marry one with the other? So how do you create a model that's got great token economics for something that taps into that, groundswell of human creativity and culture? And is that, part of the secret sauce to making these things click? To me, certainly that's what we've seen play out in the NFT space, which is that you've got this digital medium for value that allows people to be true, owners with real digital property rights, and also they get to be part of a community, and it's fun, and it's bragging rights, and it's got some benefits, and it's got all that other good stuff, and that sort of synthesis of software and culture, and software and human behavior, or whatever you want to call it, is what really causes it to click. And so it's interesting to think of, because I was thinking about this earlier, like what exactly does the chief economist do at a company like Consensys? And I think you're giving us a clearer picture of that.
Yeah, I think just to respond to that, I think the short answer to what the chief economist does is token engineering, so token launches for particular products, both internal and external. And then number two is we've got a balance sheet, and we need asset allocation and to make investment decisions, and then participate in the DAOs where we have an investment position and so on, right? So I think that that's a somewhat well circumscribed answer. I think the really interesting question indeed is like, what if you let's try to hold the position that both like NFTs are real and here to stay, generational platform shift. Okay. So like, I truly believe that. And at the same time, hold the position that the current NFT model is completely wrong, doesn't work. And I think there's lots of things to point to, whether it's secondary sales or whether it's like sort of the ICO type nature of the PFP projects. And the difference between consumption versus investment. Am I buying an experience or am I holding an investment asset? And the expectation of those gets to really different outcomes. I think I just want to lodge kind of one idea for your listeners, which I've been really thinking about, which is that the internet, the Web2 internet, has made it such that information is a commodity. Information is infinite. You have infinite information. Therefore, information is worth nothing, but the attention on top of the information is productized and packaged via advertising, right? So we all know this. So what you need to build in that model are giant information manufacturing machines that outproduce at scale the other exhaust from the internet, and then curation robots and so on. Web3 information and art is quite different, and internet entrepreneurs are allergic to the logic of what we're actually doing with NFTs. And so NFTs are fashion and luxury, and that is super sort of icky to Web2 entrepreneurs who are there to liberate information and democratize access and so on. Luxury models are such that if I'm a couture house and I make 1,000 handbags and I sell 100, I burn the other 900. I don't democratize, I destroy in order to make the 100 more valuable. So you see this in NFTs, people will burn the unminted stuff. So that's a luxury model of couture, fashion houses. And then the idea of fashion, which is you're actually trying to create seasons to make prior sales unpopular. And so the fact that you're constantly flipping over the trend is a feature, not a bug. And again, the way that you win the fashion game is you create the Marvel Cinematic Universe, where you're constantly creating a movie and every movie's a hit. But if you look at a record label in music, or you look at a movie studio, or you look at Zara or whatever, this is a thing that is deeply hard, and people struggle with how to create a hit-driven business that repeats. And I think I'm kind of waving this flag around for people everywhere, because in my mind, that's the right mental model for people to understand what we're really dealing with.
So do you think we're going to be sort of moving to a model where It's more sort of structured like the film production studio, where it's kind of teams form up around a specific project, they launch the project, create the DAO, and then sort of, obviously some people sort of stay there to maintain it, but it sort of moves to the next project. Or do you think it's more, I'm just kind of curious, because that, to me, Consensys has always been very sort of project-based, spinning up tons of projects and then sort of spinning them out with sort of some core foundational pieces in like Infura and MetaMask. I'm just kind of curious, how do you think, is it going to totally change how sort of startups and businesses are run?
I think for Consensys, that restructuring that we did about a year and a half ago really sort of took a 90-degree turn away from the venture studio model. So we're not doing that. Like, we're focused on making MetaMask and Infura and Quorum be as large and fantastic as possible. Like, I think there's no higher leverage activity in the world than getting MetaMask right, or getting the developer experience across Web3 right. I think for like particular tokens, which isn't a product question as much as like an economic question, I think for particular tokens, a person can dedicate kind of a lifetime to figuring it out, right? So as an analogy, we have right now people who are professional growth marketers who are skilled in the ad tech and marketing tech stack, that will know exactly how to take people through a funnel, right? And that took 15, 20 years to understand. And I think the number of tokens compared to the number of emails or compared to the number of websites is probably the right comparison. Like, there should be endless tokens on web, like I should be launching 5 securities a day. Each one of us should be launching 5 unregistered securities a day. Every 13-year-old should be doing a stock offering to grandma, like 100 times a day. I'm being rhetorical, but like this sort of like highlights the absurdity of the idea that there's a thing called an offering and so on and so forth. Anyway, that's just to say that we have some evidence, so like there's some evidence around Bored Apes, right? Like Bored Apes in a market where basically every NFT project is melting because there's nothing to do with them. Bored Apes is growing relative to a lot of other NFT projects. And part of the answer to why is they figured out how to keep releasing new editions, how to spice it up with the serums and to mutate them. And then like, maybe we have this spinoff and so on and so forth. So that's an example of, it's definitely a luxury good because it's not affordable to a normal person. So people aspire to it and they'll buy the cheaper one versus the most expensive one. And then second is there's seasons, there's new evolution. So I think you can have a DAO or a tribe that's stable that associates with that brand, but then has these different cycles of release and hype. And I think that's quite natural. The one kind of warning I'd give to people is like, that's the people who design the game have never been its best players. The people who coded World of Warcraft are not the crazy best World of Warcraft players. The people who made the tennis rackets and the court are not the best tennis players. It is very likely that the people who designed the blockchain game, i.e. those developing the layer ones, right, and so on, it's likely they're not the best players of the game that they're designing. So if we're talking about NFTs, like people have to realize, the crypto native players around NFTs have to realize that they're competing with Snoop Dogg and Eminem for how to be cool. Like this is not a fight I would ever want to choose to be in. Like, have like out follower and out troll and outperform like a career endlessly charismatic, like 1 in a million sort of celebrity influencer who's already won that game, right? And so I think as this ecosystem matures, I think there's just like more specialization in terms of the roles that people have. And that's all good. It's going to be bumpy on the way.
Just to respond to that point, I mean, that's true to a degree, but also, culture's constantly eating itself and producing new things that are cool. And also, to me, like Snoop Dogg and these other people have actually seized the memes of production, so to speak, and are using these tools and buying these NFTs and staking their claim in the metaverse because they're probably identifying this as a big new trend that they ought to be on top of. Just wanted to change back to DeFi and to financial services specifically. So it's been an amazing conversation, but it is worth pointing out you started your career at Lehman Brothers right around the time, just before the financial crisis, which has sort of a bit of a sort of mirror to the Satoshi story in a way. I'm not saying you're Satoshi, but Satoshi was explicitly said at the outset that trust in institutions is a problem and that Bitcoin is a trustless way to move money between people without having to use a bank. Now, you've got a lot of institutional sort of knowledge and experience, but you're also now fully in the crypto space. So I want to just understand a bit better, like in your role, are you interacting with traditional financial firms? And if so, and I think the answer to that is probably yes, how are they thinking about it, and are they taking it seriously?
Yeah. So, I think a bunch of it just comes down to my personality, which is a split personality between a finance, law, economics background and a desire to be very analytical and kind of chase gold stars inside of investment banks. And then on the other, growing up and doing a lot of coding and visual design and wanting to like play around in Flash, and make interactive new media and all stuff like that. And those were not very reconcilable characteristics in the beginning of my career, but over time it's become a big advantage because I can talk to the lawyers and the accountants and the bankers, and then I can also talk to the artists and the hackers and kind of find the common ground. And so that's been really helpful for my journey. I do interact a bunch with institutions, and I think that's a really broad brush, right? And so even if you restrict the conversation to financial services and enterprises within finance, I would say that there's been, as the market has shifted in the last 2 years, and who knows where it will shift in the next year, but as it has shifted from crypto bear to crypto bull, there's been also a change in what it is that institutions want from this space. And the change is, we were sort of in this place of blockchain, not Bitcoin, private permissioned, all of this stuff, and digital assets, not DeFi. And the framing of all of that comes down to saving cost for a large company within its existing manufacturing process. So I have a core banking system that connects to a bunch of things. I'd like for a wholesale payments channel to be a blockchain system instead of whatever, overnight CSV uploads. Or alternately, I have a bunch of capital markets desks. They have kind of bespoke integrations with reconciliation. And instead, what I'd like to do is have a consortium with a private permission chassis, that attaches information. And so that's fantastic. And Consensys has done a lot of approaches to this. The challenge with it structurally from a business perspective is that you are selling to an incumbent within its traditional manufacturing business, a replacement of one of 20 different technologies in a very integrated stack. And the way you're selling it is you're saying it will be cheaper in the future, right? And so it's a cost savings, and it's expensive for the firm to do. The change that has happened, and this plays into the regulatory stuff a bit, is that there's now appetite that's very different. The appetite is revenue focused. So interacting with blockchain is now turned into interacting with the crypto asset class, which generates a ton of revenue, as evidenced by Robinhood, Square, and Coinbase. And so these are now revenue initiatives how do we offer products? How do we offer new products to our clients? And so you see a whole bunch of companies sprouting up along that theme, right? Things like Fireblocks or MetaMask Institutional wouldn't have existed in the cost saving situation, but in a place where financial institutions just want to provide access to the asset class, whether it's just Bitcoin in a wrapper, or if it's, all of the chains, or if it's DeFi, or if it's all the way to non-custodial wallets. All of those are things that are immediately accretive, revenue generating to financial institutions. And so that's made the conversations, an order of magnitude more easy, because you're just immediately kind of generating benefit. Obviously, there's a risk conversation, but I think it's easier to talk about how do you generate benefit. How do you generate benefit and haircut for risk over, like how do you save cost but pay a lot up front in fixed investment?
Yeah, that's actually very interesting. It almost sounds like a bit of a shift from sell side to buy side, or even just sort of existing sell side introducing new services and revenue centers. I guess 2 questions. Which area of DeFi are these institutions sort of most excited about? And then also, what area of DeFi are you personally most excited about?
Great question. So I think one of the challenges for hedge funds, and every single alternative investments sort of brand name that you can think of, they are in crypto assets, often on chain. So I think there's been a full move of essentially all the hedge fund billionaires and private equity billionaires into having a crypto investing strategy. So the challenge they have is a lot of DeFi is too small cap. Like it's catch 22. It's not large enough to be investable. And so I think you won't be surprised by the names. It's whatever is the largest market cap positions in DeFi, right? Whether it's going to be Compound or Aave or Curve or in any of those types of names, where they'll buy tokens, and often they'll stake them and get some yield on there as well. But the strategies it hasn't been proven how scalable the alpha is. The tech is scalable, but the alpha, I think, has a diminishing return. Anyway, so that's kind of one constraint that institutions have. Stuff like Aave's like permission pool, I think, and there's more things like centrifuge that are designed around compliance and are designed around knowing your counterparty if you're a trading firm. And it's not like there's nothing malicious about having to behave in a regulated way, just like they can't do anything else, right? And so I think there's more and more ways that these companies can participate just in the basic DeFi functions, which is leverage and so on. As for me, I'm kind of bummed out about obviously DeFi crashing now, but the sort of DeFi bled out relative to the price of ETH over the last year. And so we have these two negative kind of
DeFi on Ethereum specifically, right? Like,
right.
Yeah.
Right. Decentralized finance. Yes.
Oh, right.
Right. Sorry. Solana's fantastic. Love Solana. But let's say Web3, anything on Web3. And for Consensys, we've got an EVM compatible hat on because of, anything that works through MetaMask. And so I'm just watching. For me, what's interesting is how the system performs under stress, and I think that reveals whether the systems work or don't. And a lot of the machines around liquidations and deleveraging, for example, none of that stuff broke in bad market cycles, and that's great. I'm really interested in Yearn as an asset manager. I think it's a really scalable, obvious, good model. It's like the PIMCO of DeFi, the next generation PIMCO. So I think these blue chip projects, the question is, how do they hold up? I've got sort of two things to watch on DeFi 2.0. And so that's the Olympus DAO model and then the Tokamak model, and I think we're seeing some of that really melt down in the current market environment, in particular Olympus, and I think it's helpful to see what the soft points are. It exposes which models are real and which models are kind of a combination of fancy mathematics and a wizard hat. And so I'm not in a place where I have something favorite other than to try and learn from, as it performs in the market.
Yeah, I think, it's interesting with the DeFi 2.0 for sure. I think that model can actually work for something outside of a stablecoin. I don't know if a stablecoin really makes a ton of sense just because there's not really sort of revenue generation coming in, unlike something like maybe a decentralized exchange. It's kind of like a continuous sort of secondary offering in a way. I'm kind of curious, what sort of important DeFi milestones do you think we'll be hitting in 2022 and maybe over the next 5 years? Alex and I have talked a lot about sort of $10 trillion in TVL for DeFi in the next 5 years. Kind of curious if you have any numbers in your head or just sort of things you're thinking about.
Yeah, it's tough in the context of the current, the current sell-off and the risk-off environment in all the different assets. I think I've decoupled my thought process a little bit from DeFi being the causal variable. And I apologize, this is very abstract, but there's a question of what comes first, the finance stuff or the underlying economic activity. And imagine you're a bunch of pilgrims, you hit the shores of the United States, you do some very questionable things in terms of the land, and then you establish your village, and then you start growing it, right? Like, where does that money come from? Where's that money printed from? Well, there's economic activity. People are doing stuff. They need mediums of exchange. There's population change. They're getting more productive, right? And so as there's more economic activity, you start needing things to deal with money in motion, money at rest. You start needing banks, and you need exchanges and markets, and then insurance and savings and lending and so on and so forth. So normally you'd expect an economy to develop in the new land, whether it's the shores of the United States or Mars or the metaverse. You'd expect the economic activity, and then you'd expect finance as a derivative on top, because it's just a function of human behavior. Sure. With crypto, it happened differently. So we laid out a digital property rights system in the shape of blockchain, and then we laid out kind of these economic and financial primitives in the shape of payment, tokenization and payments and money movement. And then we laid out the sort of financial system in which those things could be exchanged. And now we're building out the economy from that. So like NFTs are a little bit closer to real operating activity that's happening. So I've kind of unbundled my mental model from saying, I used to think like, oh, this is going to be like the ETF growth curve. ETFs took 15 years to get to 10 trillion, like you say, and they're now everything. They're all the investment instruments. So how long will it be until traditional financial software reformats into DeFi? And I kind of used to think of it that way. And you can probably still use the ETF growth curve, but that finance stuff is a derivative of economic activity in the real world. So I think the right question is, what is the economic activity in the metaverse on which number one is going to pull in assets from other places, from other economies, and then number two, that will generate goods and services that people want, and so on. And then you have to start thinking about the adoption curves for the internet, the adoption curves for, like mobile phones, TVs, and so on. Anyway, that's a long way to say that I think 5 or 10 trillion in crypto assets inside of smart contracts is totally reasonable. I think right now there's about 120 trillion or so of financial assets in the real world, give or take. About 500 trillion if you're sort of like really broad with all the economic activity out there, and real estate and pork bellies and depleted uranium and so on. So I think 10 trillion's very much reasonable, but it's going to be determined by non-financial factors. It's going to be determined by like consumer adoption and like social belonging and generational turns.
And not at all by just it being better. That's the question that people sometimes ask about technology. It's like, well, maybe this is a better way to move and store and lend and get access to credit and trade and do all the stuff that the industry does today. That's the one thing I always wonder. It's like, is it going to be just mimetic in its growth, or can it just be better and therefore more useful? You know what I mean?
Yeah, I think there's different volumes of better. So I agree with you that you want the better, that there is some entrepreneur that will take the better infrastructure and deliver a superior experience and product, And I think the question is, what's more powerful? Is it, hey, you can get 10 basis points of interest rates in the traditional system, but you get 10% here? Is that powerful? Or is the more powerful story, hey, you're going to be paying 3% in operating cost in traditional lending, and you're going to be paying, 10 basis points in DeFi lending. And so I think it's the answer is it's the asset class. Like, people largely are not coming because it's easier to use, but because it can make them rich,
Right.
because they can make more money. And that creates some really super weird incentives, unfortunately, but it's also so much more viral. And for better or worse, it's just much more powerful.
Well, I think that's a great note to leave it on. Lex, thanks so much for joining. There was a wide-ranging discussion. Actually, not totally what I was expecting, to be honest, but in this case, that was a good thing. I thought we covered a lot of really interesting things. If people want to find out more about what you're up to or just follow your thoughts, where can they get information like that?
Yeah, absolutely. Grab the MetaMask wallet, and then consensys.net for everything Consensys. I also do a weekly newsletter at fintechblueprint.com and Lex Sokolin on Twitter.
Awesome. Great follow, by the way. I started following you after we booked you for the podcast, and I wish I'd been following you for a lot longer. So check out Lex online. Andrew, thanks, and everyone for joining us. We will see you next week. We have a great pipeline of guests teed up for the first few months here of the year. So stay tuned for more updates. Until then, that's today's episode. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.